Hello everyone, welcome back to Spar&Brawl. So the whole Gamestop saga continues and there have been some new developments. So Sam is going to tell us what's the latest with that. But first, Sam, can you just start back from the beginning? I know now you've looked into it a bit more. So first share the initial story with everyone and then share the latest, please.
Sure, of course. The story started, I think, a couple of weeks ago when a number of small investors, basically, or small traders, using social media and apps that allow you to trade freely on the stock market. They use that to basically pull off something that is technically, apparently, called short squeeze on massive hedge funds with billions of dollars, and pretty much drove one of them into bankruptcy. It had to be bailed out by a outside investor who I think invested about $2 billion in it. They basically, what happened was that, first of all, let me tell you my sources. Besides some of the articles I read online, there was a great video. Shout out to a commentator who mentioned the video by Glenn Greenwald, who he did a great breakdown in the beginning. And then I saw an interview at the Gray Zone with the presenter of the Keiser report, who I think his name is Max Keiser, if I'm not mistaken. I forget, but it's a show now on RT. Which I've seen occasionally, and it's a very interesting show that largely focuses on financial markets, economies, and all that. And I think it's a pretty interesting show. It teaches you a lot about tricks, and he gave a great breakdown in his interview with the Gray Zone. Although this was before the most recent development that happened today and yesterday. First of all, wasn't just the stock of GameStop, it was the stock of many companies, including AMC, Blockbuster, Bed Bath and Beyond, and many others. And what seemed to be happening, at least that's how it was reported by mainstream media, was a David and Goliath sort of a battle between the people people who feel like they've been squeezed by government and by massive banks and by massive financial institutions, and hedge funds, banks that usually take advantage of financial situations in their own benefit. In this case, what they were doing is apparently technically called naked short selling, which means apparently, again, shorting is a very normal process that happens in all financial markets, and apparently it brings balance back to the market, because some people think a value of a stock is going to go up and some people will think it's going to go down, so they bet against, they are put against each other, and then the market makers decide the value of the stock according to supply and demand, and according to negative and positive demand. But naked short selling, which is apparently illegal but largely unenforced, at least in the US, is a process by which they start selling significantly. They start selling what this is according to Keiser, that they start selling counterfeit stocks. So they start selling massive amounts of stocks, far more than stocks that actually exist. And by selling counterfeit stocks, they managed to create this. They When market makers look at the level of transactions, then they're gonna devalue their stock. They're gonna keep devaluing their stock, which is in the benefit of the people who are shorting. They're gonna devalue it to the point of zero, in which case they would make 100% profit. So that's why they do naked short sell. They try to push the company basically to zero, so they make the maximum amount of profit. And again, apparently this is illegal, but at the same time, illegal but unenforced. So, or at least whenever it's enforced, the fine is so small that they are willing to pay that fine, but still makes such profits. You know.
Yeah, so
So
can I
this was the
interrupt you for a split second there, right
Sure.
here? So let me see if. So I was wondering how they were betting or how they were making sure that the value of the stock is going down. I was wondering if they were doing something to help the value going down. So they were doing this naked short selling counterfeit stock. So pretending that there's actually more stocks on the market. So since there are a lot on the market, then the price of the stock is going down. That's how they kind of ensure and more than just hope that the price goes down. So that's kind of the mechanism.
Yeah, base that, and I think because they are massive hedge funds, generally, if they do they keep shorting it with large amounts of money. But the larger you are, the easier it is for you to manipulate the
Yeah.
markets, basically, with your finance. But this counterfeit thing, I haven't read it, to be honest, in any of the
Mm-hmm.
articles or anything. This was just through the Keiser interview, so I'm not 100% sure,
Yeah.
but that does make sense to me. Like, does make sense to me that such behavior takes place.
Mm-hmm.
And so again, what they were doing was illegal in itself as well. So then people who had, apparently it originally started with people who had genuine sympathies for companies like GameSpot and later on AMC. Using a dashboard of these new apps like Robinhood and stuff, they managed to basically find out that this level of transaction doesn't make sense, and therefore there must be some counterfeit stock sales going on. Something is wrong. So we can, if we keep buying the stocks at a certain level, then we can push the price of the value of the stock up, and then the people who are trying to do the naked short sell, they will be squeezed instead, the opposite way. And they were successful to an extent until the hedge fund was bailed out. And this was what was happening, and I think a lot of I mean, this was something Glenn Greenwald mentioned in his video first time I heard about it. But there were probably people from other hedge funds, from other financial institutions or financial experts that were piling on and probably giving direction to this movement at some like at least after a while, because the amount of a stock that needs to be exchanged or traded to really affect the value of a stock is huge. So it couldn't have been just a small number of people. There must have been big money behind it. Not to mention the fact that Silicon Valley companies who hate Wall Street and have a rivalry with Wall Street, uh, people like Elon Musk were promoting it through his Twitter account, so helping it in indirect ways in that sense. So I mean, it's very good, and it's very attractive to think about it as a David and Goliath story, but it's probably not quite that. Uh, some people described it as Occupy Wall Street 2, or infiltration of the Wall Street from inside. And I think to an extent, yes. And if this type of act continues, that would be probably great. It's a great way to you mess with their money, so that's good. But I'm not sure if this was necessarily small investors against big investors, or bunch of hedge funds basically fighting against each other in a way. Interestingly, though, today and yesterday, the stocks started, all of them, to go down. I think the last time I checked, GameSpot stock was at $90 or something like that, 60% crash in terms of value. Same with AMC, I think, and other stocks that were caught up in this frenzy. So the mania and the whole thing seems to be somewhat over in that sense, in those stocks specifically. But I guess this might become an ongoing thing. At the same time, apparently there are reports that small investors have moved on to silver, and they're entering the precious metal markets, which is a futures market, which basically means you don't buy the actual thing, you buy a contract for delivery of the thing at some point in the future. And that's a whole different game, because precious metals are owned by government and banks who have much deeper pockets than hedge funds or financial institutions, and therefore are much more capable of controlling the markets. However, during the last well, I think 3 4 days, we have seen a huge increase in the price of silver. I think it hit a 9 month high yesterday, if I'm not mistaken. So they have been successful in pushing the price of silver up as well. By, however, it's a completely different game. Precious metals compared to stocks of a company, and a hedge fund compared to a bank.
But why silver? Why would they? Yeah, it kind of sounded odd to me when I saw it yesterday too. Why would they go after silver?
To be honest, I really
Or
haven't
like
looked
even
into
any
that.
kind of commodity like this? Because yeah, it's kind of different than the
I
stocks of
think,
a company.
to be honest, I saw a report that the expert was saying that silver and precious metals are generally going down. But then again, I've seen also reports that gold and precious metals are actually going up because governments are buying them up because their trust in dollar is being lowered, so they try to buy other things and all that. So I really have to look into that, but I don't know why. Perhaps because silver was more accessible, like it was a cheaper product, so relatively more uh, purchasable compared to gold.
Yeah,
I have no idea. I have no idea. I really didn't look into that. I should.
yeah, I
But
find it a bit strange.
what I found very interesting in the Kaiser interview was that he was very pessimistic about the future in a way, and he said that what will happen is that either, oh, by the way, now interestingly, oh, the Citadel Capital, the company that bailed out the the hedge fund, and the company that apparently has some stake in the Robinhood app that ended up, um, for a day they didn't allow traders to trade, which is very unethical. They basically stopped, and there's a class action lawsuit against them right now. So Citadel Capital has Ben Bernanke, which I don't know if you remember. He was the chairman of the Federal Reserves, and during Clinton years, if I'm not mistaken, he's one of their senior advisors. And then they have Janet Yellen, if I'm not mistaken, the current um, chairman of the Federal Reserve. She also had taken speaking fees of apparently she spoke there once and took a $800,000 paycheck. To be fair, she has, I checked her education background and all that. She does have great credentials, a great PhD and all that. She was a student of, I think, James Tobin and Joseph Stiglitz. If I'm pronouncing that wrong, I apologize. So she has great credentials, but I don't know. It just does, at least it has the appearance of corruption. And when the White House was asked if she's going to recuse herself from this matter, she's not going to advise president, and she's going to recuse herself because of her connections. The the person, a spokesperson, said that we don't know about that yet. However, it is completely natural for somebody as expert as her to give speeches and get money for it and all that. A lot of corruption and a lot of, everybody's connected. Robinhood is connected to that hedge fund, to that bank or hedge fund, and that fund is connected to that person in the government. I think Keiser in his interview described it as the system is called fraud control, if I'm not mistaken, or control fraud. I think fraud control, in which all the systems of control on a system are themselves, people in them are fraudulent. So you don't really have any problems really solved. But he was saying that, yeah, if they basically either they're gonna potentially crack down on online trading and ease of access to trading for small investors, they might do a crackdown on that, because all the financial heads of institutions are having a meeting in the US right now to deal with this issue. The chairman has called a meeting. Or if they start to, there will be calls for regulations of Wall Street, or more deeper look into the working of Wall Street and financial manipulation or something like that. He said that what they're gonna do, the banks, the powerful hedge funds, they're gonna simply crash the market because they control enough of it. They're gonna simply crash the market until the government and the politicians have to beg them to come back, basically, and just bring the market back to the to take it out of volatility, and then actually print money for them and give them money. So he wasn't very optimistic, and I think, to be honest, he may be right. So I mean, this worked because it was a new tactic or something, but they're gonna adapt very quickly, and I don't know. It doesn't look too good.
Yeah, no, I see. That is a pretty glim outlook. So he's saying, okay, yeah. So he's saying that the hedge fund guys, they might play this game back in a way or whatever, just bring the stock prices all the way down until they can force the government and politicians to apply policies or regulations that they want. Which, I mean, two things I was just thinking right now. One is this whole banning small investors and the apps and everything, but there have been small investors for forever. I mean, I know there are huge investors, but there are so many people who just invest themselves, and and they don't rely on these apps and stuff. I mean, 15 years ago there were no apps. They would go on websites and everything.
I mean, I think it's more of a myth. If I'm not mistaken, I'm not sure about the data I'm giving right now because it's somewhat old as well. I think more than 80% of the stock trade in US is done by 3% of the population, at least in terms of value. I think
no, 100%. But I'm not even talking about when they mention everybody has a little bit of stock or whatnot. But there are some people who pretty much just sustain themselves through stocks and all this. So I mean, are they banning them from accessing the stock market or these apps?
No, they may crack down on. I don't know. They may. I mean, it's very difficult to imagine because what they did in Reddit was basically like going into a street and shouting, "Guys, let's buy this."
Yeah.
You know what I mean?
Exactly.
So it's hard, but they might crack down on, like Twitter and Facebook cracking down on hate speech or inaccurate speech or whatever. So I have no idea how they might crack it down, but I guess they would find a way to do it. If you've been involved in like a subreddit group, you may not engage in this trade because it's insider information.
And then I love the reaction to it too. I mean, a lot of older people barely know other social media platforms. Now on Reddit, when they're talking about Reddit, I don't know what they think is going on there in their heads. They're just really funny. I mean, the reaction has been pathetic. I mean, from the next day, literally crying on TV about regulation and getting screwed over or anything. They didn't even put a facade on or anything. Just immediately came on, started crying.
No, I love the fact that they one of them was somebody who, I forget the guy who was on Bloomberg or something. I love that he was somebody who was convicted of insider trading before, and he was like, oh, the guy who said that, oh, it's people getting their free paychecks and using it to, I don't know if you saw that video. But yeah, he's been convicted of insider, or he settled on insider trading, and I mean, these people, bellicose.
And I wish I had prepared this clip, but I wasn't sure we were going to do this video. But I saw it in the Rising yesterday, and Sagar pretty much played this clip of this business professor, which Sagar likes a lot apparently. And he said, I usually listen to him, but I agree with what he said here. And I mean, this guy, I can't believe how much bullshit an educated person can say in 1 minute.
It's 80 to 90% of it, and if it's still worth it, then have at it. But the biggest loss of capital here will be the human capital of young men who are sitting and staring at their phone and watching the price of Bitcoin or the price of AMC. And ask yourself, would you be better off taking that 1, 2, or 3 hours a day and working out, trying to form relationships with mentors, with romantic relationships, with people at work, getting great at something so you can be the person on the other side of the trade? The greatest loss in capital here is from young men who are more prone to gambling addiction, who don't understand the markets. I think we are setting ourselves up similar to how there's a ton of young women out there who became very depressed by sitting in their rooms looking at Instagram. Self-cutting and self-harm skyrocket. I think you are going to see an explosion in young male depression, and I think a lot of it is going to be reverse engineered to apps that convince you you're part of a movement or physically addict you to your phone. Ask yourself, would your time staring at Robinhood be better spent somewhere else? That is the real capital destruction.
One of the things that I remember was that he was telling the Reddit people to, spend less time on Reddit and go get a girlfriend and work out and make connections at their job. I mean, the number of assumptions that this person who's like a professor made in one sentence was ridiculous. I mean, if we continue covering this story, I'll make sure to include the clip. But if people want to watch it, go on The Rising, and it was from Wednesday. Crystal was doing a segment on it. It's just, but everything that you see everywhere, all the little reactions that they've had, completely ridiculous.
I love how when capitalists suddenly become hippies and man, forget about it. Let's go to the flowers and run around and sing a song. And what's money? What's government should control? You shouldn't have volatility. What the fuck? Volatility is bad.
And do you think any of the Reddit people who took part in this, do you think they made any money? Was there any way of making money? Or, I mean, did the stocks drop down too quickly for them to sell them?
I think significant number of people got screwed, basically. But I think a lot of people...
Okay, but what about the people on Reddit who bought it? Do you think they eventually, any of them made any money, or the stock price just dropped too low?
I think because I haven't seen any data regarding that, but I would say it's 50-50 probably.
Yeah.
I would say because probably significant numbers of them did sell before it went down too much, and they probably, a lot of them bought it, at the very low cost.
Yeah.
So 50-50 probably, I would say.
Yeah.
I don't think, I don't know. I would say I would assume people who lost money are probably more, in my view, than people who made money.
Mm-hmm.
That's what I would think, but who knows?
Yeah, okay, I see. And I love how at least the parts in the media that I saw the coverage, and this is the last comment I have on this, I don't know if you have anything else, is that there were no talks about what that hedge fund company was doing before that. So, that they were hoping that the prices of the stock goes down so this company crashes, right? I mean, this was the eventual thing that was...
That was the whole point of the make it short sale.
Exactly.
Make 100% profit because it's zero.
Exactly. So no talks about what the hell they were up to. I mean, legal or illegal. I'm not saying ban them or put them in jail. Just how pathetic it is what they were doing. You just forget about that and just go straight into this part of the conversation. But anything else on this story?
No, but let me see if I can add anything for a conclusion. But no, it's just, but very interesting. Hopefully, and probably we'll see more of these type of online actions or online organized actions through apps in the future. We'll see. But it's a whole new world out there, I guess.
Yeah, on that, I would like to see if it continues or not. I think it's too early to say, like, if there were any activism ambitions, really beyond what was initially there. I don't know, like linking it to Wall Street movement and all that. I'm not sure if it was just for this company or whatnot. You know what I mean? I mean, it's too early to think if there were those kind of ideas behind it already.
Sure. Yeah. But it's too early to see if it's really connected to a movement or if it was one-off. We'll see. Well, it was very interesting, though. Fascinating. Definitely. A good one. Learned more about the stock market, so that's always good.
Yeah.